Interest rate traders are pricing in a 25 basis point rate cut in September. It's according to the CME Fed Watch. The 30-year fixed rate mortgage rate sits above 6.7% and has remained in that same narrow range for the last month. What could a possible September cut do for mortgage rates? Well, joining me now is Jeff Taylor, founder of Mphasis Digital Risk. Jeff, it is good to see you. So let's get right to that question, Jeff. You know, if the Fed did cut in September, that would mean what for mortgage rates, Jeff?
Josh, thank you for having me today. Well, let's just take a look at what's happened over the last few days. August 1st, mortgage rates 30-year were about 6.875. Today, they're around 6.5. So we already saw 37% basis points, or 0.375 that is. And why did we see that? We saw that because the jobs report came in on an average of 35,000 jobs over the last 3 months, much lower than what people had expected. So the mortgage market tends the mortgage market moves with the bond market, as we all know. So we already saw 0.375 without a Fed rate cut. So if we did get a rate cut about 25%, then we'd be probably in around 6.25%. And I think that's when we could actually start to see maybe some refinance volume come in for people who have refinanced over 7%.
You know, Jeff, earlier this morning, Mohammed Al-Arian, so president, of course, of Queens College, Cambridge, said a bigger rate cut could be in play in September. Take a listen.
Is it a lock for September? Yes. I think a 25 basis points cut is a lock. A 50 basis point cut is a possibility, not yet a probability, it's a possibility.
So, Jeff, Mohammed, they're saying it's a possibility we get a cut by 50 in September. Let's say that happened, Jeff. What would be the effect? What would be the impact on the mortgage market? So,
let's go back and look at 2024. So before there was any rate cuts, right, you went from a 7.5 mortgage rate down to 6.17. And then we had 3 rate cuts covering 1%, and the mortgage market went back up to 7.4%. My point there is the mortgage market sort of moves. It does move with Fed cut, but it also sort of moves where things, inflation and other key economic data factors, such as the jobs, are also moving. So again, a Fed cut would help bring it down, but as I just said, sometimes it can be counterintuitive that after the Fed cuts, where actually the mortgage rate market goes again. So we'll see what happens. Right now, I wouldn't be surprised to see a mortgage rate somewhere in the about 6.25 in the course of the next couple of months.
Rates are important, Jeff. So is inventory. What do we see with supply right now?
So, supply is actually, I was looking at some data the other day, and I haven't seen this in a long time. Right now, the price of a newly built home is 8% lower, $402,000, the medium, than an existing home at $435,000. Now, a lot of that's because of builder incentives, 62% getting incentives. And the reason they're doing that is because the overall supply market is pretty healthy. Prices are starting to come down a little bit, but they're still pretty, it's pretty good supply out there. Again, if I'm looking at the market right now, I'd really be focusing on the new homes right now versus the existing market for the reasons I just said, as far as price affordability and being a little bit cheaper.
Some of the economic data, Jeff, you've seen this that we've been getting here. It would suggest some softness. I'm just curious. You're looking at that data. You're watching those headlines. What could that mean for the housing market going forward?
So, the biggest thing is always affordability, right? So we're taking a look at if incomes or job growth is starting to slow down, when are people actually going to make that purchase, which is the biggest purchase potentially in their lifetime. What I'm seeing right now is, again, I would not be surprised to see the new homes really starting to take up as far as purchases. And, where a year and a half ago we were seeing existing homes, it was bidding at or above the current list. In the last couple of months, we're starting to see people negotiate for pretty significant discounts in housing market pretty much across the country. So if you're looking for a house, the pro tip is to be aggressive with your offers. Nobody's going to laugh you out the door. You can get a pretty decent discount. Secondly, if you're negotiating with a home builder, make sure you're asking about all the incentives you can get, because over 62% of them are giving significant incentives to get those houses sold right now.
On this last one, Jeff, you might have line of sight here. Kind of a generational question. Are younger Americans, Jeff, are they just as eager, just as excited to buy a home as they used to be? I ask because I've had some folks on the show recently kind of suggesting to me that maybe they aren't. Maybe there has been some shifts there.
It's a great question, right? So if you go back, and we had some of the millennials, call it 15, 20 years ago, coming out of the financial crisis, living at home, saving money, renting. We weren't seeing that first-time home buyer really jump into the market. I think right now, this generation, let's kind of put that in the last 6 to 7 years, they are looking to make that first-time purchase and get into the home market. And we're seeing that much more in volume and much more in scale than we had previously the last 10 to 12 years. So I think that a lot of the first-time home buyers are coming into the market right now. And even though affordability is an issue, they are prioritizing getting themselves a place to live as their key number one priority in financial investment.
Jeff, great to have you on the show today. Thanks so much for your time and insight. Appreciate it.
Thank you, Josh.